Hey, what is up guys, and welcome back to my channel. And for today's video I want to talk the US housing market. So let's go a little bit back in time. Let's go back to March 2020. As you know, the pandemic started. It hit hard the economy of the United States, and a lot of businesses had to close their doors. The government implemented a quarantine and a lot of people got stuck at home. The Fed, in order to tackle this crisis, this economic crisis, they lower interest rates. What it means is that now money is cheaper to borrow. For instance, if you want to get a personal loan, if you want to buy a car, or if you want to buy a home, you will be paying less interest rates than before. So for example, if you wanted to buy a home last year and the price was, let's say, $300,000, you would be paying for your mortgage payment $1,700 monthly. But if you want to buy that home today, for instance, at the same price and the same conditions, then instead of paying $1,700, you will be paying $1,400. So you will be saving $300 just because interest rates are actually low. So the Fed has done this back in 2008 to tackle the crisis, and they did this back in 2000 to tackle the crisis as well. But the thing is that since people was stuck at home, they couldn't go out to buy homes, and actually people that wanted to sell their home actually didn't list it because they didn't want anyone walking through their home, and they didn't know if they was infected or what. So the real estate market actually was on a halt because of this situation. Some real estate companies uploaded videos to the internet of the homes and more photos, so people could watch all these videos and photos and make decisions if they wanted to buy the home or not. But as you might imagine, this actually didn't work properly, because personally speaking, I wouldn't like to buy a home just by watching some videos and photos. So over time, the government started to lift some restrictions, and now people that wanted to sell their homes, they were able to list the information to the internet, and people who wanted to buy homes and seizing the opportunity of low interest rates, now they had that opportunity because there were more homes listed. So real estate market started again, and a lot of people flooded the market. And there is something very basic in economy, and it is supply and demand. When the demand of a product and service is actually higher than the supply, then the price is going to go up. And this is what actually happened with the real estate market in the month of June, July, August, September, and even October. These people flooded the market, and supply actually couldn't keep up with demand. So prices started to go up, sales started to surge, and people were paying more for their home. So it was clearly a market for sellers, but somehow buyers actually offset the high prices because of low interest rates. But this is where things get more interesting. The Fed cannot keep low interest rates forever. At some point in the future, they will have to increase interest rates again. So let's go again back in time, and now let's go to the year 2000 until 2008. As you know, the dot-com bubble burst in the year 2000, and the economy crashed again. So the Fed lowered interest rates in order to boost the economy, and a lot of people rushed to the bank to get a mortgage and buy homes. Restrictions back then to get a mortgage were actually pretty low, and basically everybody could get a mortgage in those years. But again, the Fed couldn't keep low interest rates forever, and before year 2008, they raised interest rates again. So what happened? So a lot of people saw their monthly payment increased, and a lot of people actually was getting behind on their monthly payments. And when this happened, what you can do is you can sell your home. So once you sell your home, you can pay off your debt, and sometimes you can make some profit. If a lot of people is selling their homes, they are going to flood the market, and again, basic economy, supply and demand. This time supply was higher than demand, and what happened is that prices tend to go down, and this is what actually happened back in 2008. A lot of people got behind of their payments and they put their homes for sale and they flooded the market, so prices started to go down. And even if that people sell their homes, the price actually was less to what they owe for the home. And even if they sell the home, they couldn't pay off the debt because their home actually was cheaper than before. And because supply actually was higher than demand, then a lot of people couldn't sell their home. And what happened is that the bank has to file for foreclosure, and a lot of these people lost their home. And that is what happened back in 2008. So now let's go back to the present year, 2020. So a lot of people lost their job, and again, Fed lower interest rates, and money is cheaper to borrow, right? So in order to avoid what happened back in 2008, the government implemented the forbearance program, meaning that all that people that actually couldn't continue paying their mortgage, now they can pause the monthly payments, and until everything is back to normal, then they will continue paying their mortgages. So there are three options that for me might actually happen in the future related to the housing market. Option number one is, once the forbearance period is up, if the economy has fully recovered, meaning that your income is at levels it was before the pandemic started and stuff like that, basically you will continue paying your monthly payments normal, and you're not going to lose your home, and more likely prices might continue to go up again. So option number two, once the forbearance period is up, if the economy hasn't fully recovered, then many people might get behind on their payments and they will have to sell their home in order to pay off the debt. But option number three for me is the worst one. Once the forbearance period is up, if a lot of people is getting behind on their payments, then what happened in 2008 might happen next year, because people will flood the market because they don't want to lose the money, right? So if the supply actually is higher again than demand, then prices might go down, and even if you can sell your home, actually it's going to be worth less than before, and you might not pay off your debt because your home is cheaper than before, right? But if you cannot pay your home, then the bank will file for foreclosure and you're going to lose your home and your money as well. But this is going to happen only after the forbearance period is up, and this is going to happen until next year, and after that we have to wait a couple of months to see if a lot of people is getting behind on their bills or not. If this is the case, then more likely they might flood the market again and house prices might go down. A lot of people can lose their home again, but this is going to happen until year 2022. So again, this is not going to happen until year 2022. So for me, this is what actually might happen. Like I said, we have three options: either the economy fully recovered and everything is back to normal once the forbearance period is up, or some people might get behind on their mortgage payment and they might end up selling their home and paying off the debt. Or if a lot of people get behind on their payments, they will flood the market, and what happened in 2008 might happen again, and prices might go down, and even if they sell their homes, they might not be paying off their debt because the price of the home is less to what they owe for the same home. But we don't know actually what is going to happen. Like I said, this is just some options that I think might happen, but we'll see this until year 2020. So this is what I have ready for all of you. If you like the content, please hit the like button and subscribe to my channel. And if you have comments, leave the comment in the comment section below. Thank you for watching and have a good one.